There are few people in the world who want to sit day and night in front of charts. Most people come to trading solely for the money. Often people think that they want to trade. I hammer it into their heads that they really like it. But what about statistics? Out of 100 traders who came to the market today, in a year there will be only 20 left in 3 years. 10A. Only 3 are on the horizon in 5 years. If people really enjoyed trading, the statistics would not be. So, sadly, that is not the case. Why it does not work out and people leave the industry not because the trading strategy is crap, the market let you down, or Jerome Powell, everything is crap. Problems do not arise because of outside factors, but because of an initially incorrect view of trading. If you are just starting your journey into the wonderful world of margin calls, then today's video is for you. Even if you trade for a year or two, you will stay. I am sure you will find a lot of useful information. So, 7 tips for beginner traders. Think, are you really ready? Trading is not an applied discipline. Knowledge of the market is limited by the market. Therefore, if suddenly in 3 years you realize that this is not yours, you will simply lose time. Starting a business? You study sales, marketing, design, logistics, and a bunch of other things that are related to the chosen direction. Even after quitting the business, you will have skills that you can apply in hired work or try to start your own business again. If you quit trading, then no one needs your ability to draw lines on charts professionally, filling out a journal, and technically pressing the buy and sell buttons. This is an important choice. Carefully weigh all the pros and cons, and if you still choose trading, do not give up on it. Go to the end. This brings us to the second piece of advice. Your task is to survive. Catch a juicy blow to expectations in the first year. You will not turn the market into a stable source of income. Catch the second blow probably in the first 3 years. This is also approximately what the second piece of advice sounds like. Try to hold on for 3 years. Catch the third blow, which turns into a nervous hug. It will be much easier further if you hold on for 3 years working on trading and collecting statistics. Then the hardest part is behind you, 3 years. This is a fairly long period, and there are definitely traders who have become consistently profitable much earlier, but it will be better if you from the very beginning set yourself up for a long journey to a systematic profit. This is the hardest way to make easy money, and all the difficulties fall at the beginning. Just survive, collect statistics, and keep a journal. Without this, everything loses its meaning, and 3 years will turn into 5 and 10. You will be marking time, and the word progress is unlikely to be applied to your trading approach. Only by collecting statistics and analyzing it, you will be able to see the strengths and weaknesses. Defining the problem is already half the way to solving it. I will give an example. Put 2 people in front of a basketball hoop and ask them to make 10 free throws. A person who does not analyze throws and does not make adjustments to the movement will show a mediocre result. But if a person after each throw analyzes what he did well and what is bad and makes appropriate adjustments, for example, throw harder a little to the left, or can open his eyes, the pace of learning grows exponentially with a large number of transactions. It will be possible to better understand the dynamics of victories and defeats. Many traders believe that the presence of some indicator or system will give them an advantage, but thanks to statistics and tests, they understand that good setup, it's just a grain of order in a sea of randomness. A single transaction can lead to both a positive and a negative result. You don't know what the outcome will be, you just build a hypothesis. Okay, the setup looks good, it matches my rules. You can try to open a deal. Take responsibility for your decisions and actions. Regarding trading signals, there have already been 1,000 videos, articles, books, films, podcasts. But people still continue to look for groups where the magic guru trader will make everyone around him richer. The problem is that the guru trader is in effect. It can be profitable, but you missed a couple of entries or completing the risk. In a single transaction, it levels out all its profitability. And this is all with a positive scenario where the trader is really profitable. Most of these subscriptions are unprofitable over the distance. I will look at this situation not from the point of view of profit, but from the point of view of development. I will be brief. Any signal group unrealistically distances you from success in trading. The sooner you take responsibility for the results on yourself, the sooner you can call yourself a trader. Until then, you just play the buttons quick and easy. Profit does not exist. And to hell with it, imposter syndrome is a pretty nasty thing. It is much nicer to master a skill that will feed you for the rest of your life. You will have to spend hundreds and thousands of hours on it in front of the charts, but it is definitely worth it. Another place where you will have to take responsibility is banal. The market on this topic, there are two videos, constancy and consistency. Be sure to watch. In simple words, you cannot influence market movements and what knocked you out on the stop. But you can influence your reaction to this event. You need to maximize the impact on controlled variables, point of interest, position size, setting, take and stop everything. Everything else the market will decide in your power, only the correct execution of transactions and the correct reaction to the result. Take responsibility for these actions. The sacred grail has already been found. This is risk management, a simple idea that many ignore. Yes, risk management. Psychology is all important. I understand. Come on, already trading system. Stop. Agus. Listen carefully. Now, the main thing that separates you from a gambling addict who takes money out of the market, thanks to luck, from a consistent and stable, profitable trader who takes money out of the market, thanks to skill, is risk. Man, stop overestimating risk. Stop moving. Stop adding to losing positions. Think about how much time, emotions, and energy you waste repeating these idiotic mistakes. Instead of solving psychological problems, many of which have already been solved, risk management. You could collect statistics, study the market, and work on a system. You can use any concept: smart money, dumb money, Bollinger Bands, Fibonacci, magic grid trading on the cycles of the moon, or your girlfriend's cycles. All this can work, but only if you follow a plan and control risk. You will come much faster, by the way, if you just stop losing more than you should. To hell with ego. People love winners and always keep silent about losers. We hear the story of huge earnings of units but refuse to listen to the stories of huge losses of thousands. The industry loves big victories, and it loves to instill that you are created for these victories. Focus on real goals. Become a consistent trader who is methodically busy with business and consistently brings in profit. Michael Lewis wrote about prop trading firms in one of his books. There were guys in the firms who sometimes got just monstrous annual profits. Sometimes such traders brought companies $50 million a year. There were other guys who brought firms $10 million, but steadily year after year. Although at the end of each year, the bonuses were naturally received by those who made $50 million. But all these guys over the next X years flew out of business, went bankrupt, lost money, because often their results were a consequence of transactions with an inflated risk of dispersion and banal luck. Traders who did not have any incredible achievements, but who had the right mindset for trading, continued to bring their firms the stable move necessary for running a business. The firms were supported by them. Here is your role model. Your ego will emit radiation. When you catch a stop, the brain is accustomed to the classical scheme. We try, we make an effort, we work on ourselves, we carry out all the points that Jay said. We get a positive result. Wait, what a loss. You're crazy. I work and try. No loss is unacceptable. It is your ego that refuses to accept that the price went to the stop instead of the take profit. Mind you, I don't say that your ego refuses to accept that you are wrong. The market has little to do with being right or wrong because it is a chaotic story, but the brain thinks exactly like that. You are wrong. Hence most of the problems. Overestimation of risks, transfer of stop divorce, refusal to pay elements, and rap career. You need to overcome the need to prove your worth. And rightness, most people try to achieve through trading. This is exactly what. If I make a lot of money and turn out to be right, I will be someone. I will be a cool guy with a big dick. People want to prove their worth through trading. There is little that could be more stupid. It's like shaking hands, Pakistan, so stop trying to be the alpha who always wins. To hell with the ego. And last but not least, advice: think in percentages and not dollars. Traders who are just coming to the market pay too much attention to potential profit, while experienced traders are only worried about following their system and managing risks. Don't think that you will become stable and consistent as soon as you have a large capital. You need to develop useful habits and the right approach. Now, even with a small deposit or account in prop trading companies. Look at any discipline a programmer first gains skill in order to then qualify for a high salary. A doctor first practices for little money in public clinics in order to then move to a private one and earn several times more. Everywhere it takes time to develop skill. So you focus on doing 2 to 3 pro per month but stably. This is much better 20% in March and minus 10% in April. You will show a stable profit, money will find you themselves. Well, and a little parting word in the end so that trading brings a good income and the exchange becomes a place of work. You will have to treat trading as a full-time job. It seems everything is obvious, but the vast majority ignores it. Roll into the market smoothly. Do not quit your job. Do not fantasize about how you can quickly get rich. You are ready to spend 4 years at university to get a useless crust, but you are not ready to spend a couple of years to understand the fundamentals of trading. Give yourself time. Do not treat trading the way an impulsive baller treats sports betting. Not think about money and strive to simply be profitable. Learn to work with small amounts and increase the volume. Learn to work with a large volume. Provide for yourself for the rest of your life.